Visa Inc. is one of the most influential companies in the global financial ecosystem, serving as a cornerstone of the digital payments industry. Since its founding in 1958 as Bank Americard, Visa has evolved into a technology-driven payments powerhouse, facilitating transactions in over 200 countries and territories. Its impact on the shift from cash to electronic payments has been profound, and Visa remains a leader in enabling secure and seamless commerce for billions of consumers and businesses worldwide. For investors, Visa offers an attractive combination of growth potential, financial stability, and a growing dividend that reflects its commitment to rewarding shareholders. Understanding its history, financial metrics, competitive advantages, and challenges paints a compelling picture of why Visa deserves serious consideration as part of a long-term dividend portfolio. Visa's financial strength is reflected in its remarkable market capitalization of approximately $613 billion as of December 2024. This places it among the most valuable companies globally, underscoring its significance in the modern economy. Visa's annual revenues of $32.5 billion highlight its ability to consistently generate substantial income, driven by the sheer scale of its payment network and its expanding presence in both developed and emerging markets. The company's business model is highly scalable as it earns revenue from transaction fees, data services, and value-added products without taking on the credit risk associated with lending, which is borne by its partner financial institutions. This low-risk, high-reward model has enabled Visa to maintain strong profit margins and steady cash flow. One of Visa's most attractive features for dividend investors is its history of shareholder returns. While its current dividend yield of approximately 0.76% may appear modest, Visa's dividend growth rate sets it apart from many other dividend-paying companies. Over the past 5 years, Visa has increased its dividend at a compound annual growth rate of 14.48%, underscoring its commitment to consistently raising payouts. The company's relatively low payout ratio, which leaves ample room for reinvestment in its business, ensures that Visa can continue to grow dividends without compromising its ability to innovate or expand. This balance makes Visa particularly appealing for long-term investors seeking a blend of income growth and capital appreciation. Visa's ability to maintain its dominance in the payments industry is closely tied to its commitment to innovation and strategic expansion. The company is investing heavily in emerging technologies to stay ahead of the curve in a rapidly evolving landscape. For instance, Visa has embraced contactless payment technologies, allowing consumers to make fast and secure payments through tap-to-pay cards or digital wallets like Apple Pay and Google Pay. These innovations cater to the growing demand for convenience and security, ensuring that Visa remains relevant in an increasingly digital world. In addition to embracing traditional digital payment technologies, Visa is actively exploring opportunities in blockchain and cryptocurrency. The company has launched initiatives to facilitate cryptocurrency transactions, enabling seamless integration between digital currencies and its existing payment infrastructure. By positioning itself as a bridge between traditional finance and the growing world of decentralized finance, Visa aims to capture market share in this emerging sector while maintaining its leadership in traditional payment processing. These developments highlight Visa's ability to adapt and innovate in response to changing consumer preferences and technological trends. Visa's global expansion strategy further underscores its long-term growth potential. While the company is already well established in developed markets like North America and Europe, it is increasingly focusing on underpenetrated regions such as Asia, Africa, and Latin America. These markets, where cash remains the dominant form of payment, present significant opportunities for growth as consumers and businesses adopt digital payment solutions. Visa's partnerships with local banks, fintech firms, and governments in these regions have allowed it to establish a strong foothold, positioning the company to benefit from the accelerating shift toward cashless economies. Under the leadership of CEO Alfred F. Kelly Jr., Visa has continued to execute its growth strategy with precision. Kelly, who has been at the helm since 2016, has overseen a period of significant innovation and expansion for the company. His focus on enhancing Visa's core payment capabilities while diversifying into adjacent areas such as cross-border payments and real-time money transfers has ensured that Visa remains competitive in an increasingly crowded marketplace. Kelly's emphasis on adaptability and long-term planning has solidified Visa's reputation as a forward-thinking company capable of navigating the challenges of a rapidly changing industry. Despite its many strengths, Visa is not without challenges. One of the most significant risks facing the company is regulatory scrutiny. As a dominant player in the payments industry, Visa is subject to antitrust investigations and lawsuits that could impact its business practices. Regulatory actions, whether in the form of fines or mandated changes to how Visa operates, have the potential to affect its profitability and growth trajectory. Additionally, Visa operates in a highly competitive environment, facing stiff competition from both traditional rivals like MasterCard and emerging disruptors such as PayPal, Square, and cryptocurrencies. These competitors are continuously innovating, and any failure by Visa to keep pace could erode its market share. Another challenge for Visa is the rapid pace of technological change in the payments industry. While Visa has been proactive in adopting new technologies, the emergence of decentralized finance models and blockchain-based payment systems represents both a challenge and an opportunity. These innovations could disrupt traditional payment networks by offering lower fees and greater transparency. To remain competitive, Visa must continue to invest in its infrastructure and adapt its business model to accommodate these shifts. Despite these challenges, Visa remains a highly attractive investment for several reasons. Its financial stability, global reach, and commitment to innovation provide a strong foundation for sustained growth. The company's dividend growth history further enhances its appeal, offering investors a reliable and increasing income stream over time. Visa's ability to balance shareholder returns with reinvestment in its business ensures that it can continue to capitalize on emerging opportunities while maintaining its leadership in the payments industry. I personally hold a position in Visa because I believe in the company's long-term potential as both a growth and dividend investment. While Visa's current dividend yield of approximately 0.76% may seem modest compared to higher yielding options, its consistent dividend growth and exceptional financial performance make it a cornerstone of my portfolio. The company's 14.48% dividend compound annual growth rate over the past 5 years is a testament to its ability to reward shareholders while maintaining the flexibility to reinvest in innovation and expansion. This growth-oriented approach aligns perfectly with my investment strategy, as I see Visa's dividends appreciating significantly over time as the company continues to mature. Visa's relatively low payout ratio and strong cash flow give me confidence that the company has ample room to continue increasing its dividends. In the short term, I recognize that the income generated from Visa may not compete with traditional high-yield dividend stocks. However, I view Visa as a future dividend giant where the current focus on reinvestment and innovation is setting the stage for decades of dividend growth. This makes Visa a unique blend of a growth and income stock, offering the potential for capital appreciation alongside an increasing income stream. It's important to note, though, that my decision to hold Visa is based on my personal investment goals and research. This is not investment advice. I make these analyses and write-ups as a way to better understand the companies I invest in, their strategies, and their long-term potential. My belief in Visa is rooted in its leadership in the payments industry, its ability to adapt to technological changes, and its history of delivering value to shareholders. While I am confident in my position, I encourage everyone to conduct their own research and align their investments with their individual financial goals and risk tolerance. For me, Visa represents not just a smart investment, but also a fascinating opportunity to learn more about the evolving world of global finance and digital payments. For investors seeking a blend of growth and income, Visa represents an excellent addition to a long-term portfolio. Its exposure to the ongoing transition toward digital and cashless payments positions it to benefit from one of the most significant economic trends of the modern era. Moreover, its strong financials and disciplined management make it a resilient and reliable investment, capable of weathering economic downturns and adapting to industry changes. In summary, Visa's leadership in the payments industry, coupled with its financial strength and commitment to innovation, makes it a compelling choice for investors focused on the future. By including Visa in a portfolio, investors can participate in the transformative shift in global commerce while enjoying the benefits of a growing dividend and long-term capital appreciation.